Inflation, stagflation, deflation, China. How does all this work out? Stay tuned and find out. Hello, welcome to the Wealth Transfer. I am Terry Saka, the Chief Strategist, and we've been talking a lot about on this program over the last couple years about China and how China was building this thing called the Silk Road. Now, this goes back thousands of years, and the Silk Road basically is a trade route. Now, the reason I'm bringing this up again is because we're having an issue. Although everything is looking great in our country, well, the perception of it anyway, is things are doing better. Obviously, policy is definitely driving economic growth. We are seeing money being recapitalized back to the United States. We are seeing corporations hiring. People are hiring. We have unemployment low in sections of the population that normally was not. But the interesting thing is we still hold a very real figure that we have to address. And that is that, and if you go to shadow statistics anyway, which basically means if you take the economic model calculations that were from the 1990s, we right now today hold a 21% plus unemployment and over 10% plus inflation. Now, those are very real numbers, folks, and you can't debate the numbers. Problem is, right now, and all this money printing frenzy we're seeing globally, the manipulation to the numbers are showing what you see that paints this rosy picture. So the question comes, or let's go to this. Investors are not sure if they're in an inflationary, deflationary, or stagflationary. Now, just in the bottom line, inflation basically means prices going up. Deflation means prices are coming down. Stagflation means we're just kind of flopping around like a fish out of water. Well, these numbers that I just displayed to you with inflation and unemployment, these are very real. Now, yes, we are seeing positive trends in some areas. And yes, we are having some positive results in policy, I think globally, as well as internally with, Christians' freedom, religious rights, and, such of judges, and giving us back maybe some space towards the patriotic. But the bottom line is the economy, the finances globally is still there. Nothing has changed. And, when people come in and they start talking about how do I protect and preserve myself the best? Well, the stock market is what they're pumping because everything is going so well. Unemployment's so low that we have, all this economic driving and all this revenue being created in the stock market. But the fact is the stock market's still way off the high for the year. It really hasn't gone anywhere. And these numbers aren't exactly real. Now, I'm positive because if we had gone the other direction, we would be fully slammed right now with social justice warrior mentality and the complete breakdown of anything constitutional or free. We're unfortunately seeing that even at the executive levels of the public service, tremendous amount of corruption and behavior coming out of the Inspector General report. That's very disturbing only because it's polarizing. Our nation's already polarized. And when you think about America, it was a good point was shared with me that, back in the day, our country had this middle ground. Probably State Department, probably Pentagon military, probably those that are career in the stability and the creation of the narrative of the world. Now, these were smart, these were hard-driven, and they were stable. Now, supposedly nonpartisan. It weren't about politics. It was about the policy-driven. They ran the country, or the direction thereof, of the global narrative. And then, of course, we would have our politics, both left, both right, And we would always squabble on what they want to do. I want this policy, I want this policy. But in the middle, they kind of kept the ship straight. Well, today, we have such polarization where you have progressive, liberal, Marxist, socialist driving towards socialism, communism on one side. We have populist, constitutional, sovereign, free American on the other, and that is never going to reconcile unless you teach the socialists how freedom actually benefits them better. This is a problem because now we have such a polarization, and what we've seen now with the Inspector General report, that those in the middle that are supposed to be unpolitical, that are supposed to be neutral, have become very political, as we saw how they were trying to throw the election for Hillary Clinton, and yet they still lost, which is incredible. Now, why is this important? Is because while we were distracted, while our country over the last 7, 8 years has been distracted with economic calamity and this social justice garbage, which some of it, don't get me wrong, is actually good. We do need a little more balance of love, Christian love, mind you. But while we've been tearing each other up, one side going socialism, the other side going patriotic, the world has been forming new direction in leadership. The Chinese has been forming, with Russia, India, the BRICS nations, Brazil, Russia, India, China, South Africa, a completely new financial structure. And this financial structure is important because it is mirroring us in the West when it comes to the Asia Infrastructure Investment Bank now mirrors the IMF. The New Development Bank now mirrors the World Bank. So you see, they have everything the West has. We control the SWIFT, which was interbank transfer systems, which gave us authority and power in the world's finance, and now Russia has it. We forced during these years of distraction, and I don't know if it's the whole Ukraine, Syria, ISIS, all this distraction that was going on. In the mean of that, we lost the narrative. We lost the Silk Road. China now owns maritime. They own 2/3 of the shipping and ports, and they control a major chunk of the world's economy. They're the largest trading nation. They're moving rapidly. And the de-dollarization of that move between China, their allies, Russia, is real. Hence the question, what are we in? Inflation, deflation, stagflation. But just keep in mind that the politics is so divisive in America. For those standing for the Constitution and what we were as a nation and our freedoms, and then those who want to take it all away and become socialists. That's not good because the rest of the world is plotting to take down our dollar. And they've been de-dollarizing, and this has been going on for years. And so I'm keeping with the narrative how important it is to understand how China is rising. And without getting too crazy on it, you just got to go to the South China Sea to see it, how they created an island out of nowhere and how they took that island out of nowhere, put missile systems on it, and are basically controlling the region. A head-to-head is coming in some way. I have to think prevailing heads win because it's all about money, but we'll just have to wait and see. All I know is the dollar has lost its position. And even though the policies are showing we're doing well, you have to understand that underneath the data in banking in Europe, in the United States of debt at epic proportions, is really, really bubbling. It's almost like the volcano in Hawaii. So why is that important? Is because our assets are tied up in the market system that's all in paper. So I really highly encourage those, get involved in being educated. This is not the time to be fully in something like a stock market or speculating too heavily. You can, but I would highly recommend being diversified in physical tangible assets like silver. Be educated about it and at least be diversified, because if one takes down and collapses before you can make a move, at least you have a hedge. And a good place to get started is Cornerstone. I know they have operators standing by, but I would definitely give them a call. They'll guide you on how to protect your assets privately with physical tangible assets like silver and gold. But I'm going to have to take a quick break before we get into the data, so let's do that and we'll be right back.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. So the reason I brought that up before the break is I just remember very specifically in the financials of real estate and such, 2005, 2006, when things started collapsing, 2007, 8 came and the big collapse took place. Everything was looking excellent, and then out of the blue overnight, everything collapsed. I'm just merely saying, do you have the time, 10, 12, 15 years, to ride out a collapse again? Or should you consider being properly diversified in real physical tangible assets? And that's where I'm getting at. It is vital that we are. Get educated, if anything. Go register on the website for Cornerstone. Give them a call. They're standing by now. If anything, just start to understand what it means and be diversified. It's simple, and you have something real and tangible you can fall back on. Now, when we talk about inflation, deflation, and stagflation, this is very important because inflation robs us of our wealth. The dollar we think we're holding isn't really the same because it doesn't buy us the same. Gas, a great example, right? Back in 9/11, it was really $1 a gallon, and now we're staring at $3 plus, right? But here's kind of where it comes down to. If you look at the total global credit market debt owed, dollars in the trillions and a percentage of GDP. You go back to just kind of over from the left in, and you see that it's where the shade of red is and where it's neutral at 100%, meaning it's kind of equal. From 1970, when we came off the gold standard, created this new dollar note, we started increasing money printing. And in doing so, we've created debt. And debt is just really an IOU out of thin air. Now, in creating this debt, it's putting burdens on the ability to repay that debt, of course, to children's children's children, as well as the nations. The blue line represents the debt in the trillions. And folks, if you're seeing that number, 180 trillion in global credit market debt that is owed. And that's pretty recent, most of it. That's a staggering amount of credit. And the problem with that is who owes it and in what currency. Now, if you also notice the red is a percentage of GDP. Look at the gap between 100% and where we are at 300% right now in the global aspect of it. And then down in the very bottom is the world GDP and what we actually produce. And you see how far of a gap in the shade of pink we are. Staggering amount of debt right now in the globe. Yet we have all these geopolitical issues, and we have China rising with the Silk Road and the dominance of trade and finance. Now, we still control the finance, but here's our biggest problem. We've become not a dollar nation, which back in the day when we were a dollar-based, when this actually was, as the Constitution describes, Article 1, Section 8, grains of silver, it was valued at something. This has gone up 1,700% since it's separated from this. That's a big wealth transfer, and it's just getting started. Now, if you notice in the screen behind me, this is a Federal Reserve note. That's where all this kind of went south, because we've been experiencing this expansion of just basically printing money and credit. Now, we've been living it, and to us it seems like it's working. The problem is there's always a piper to pay. And all of us the best example is this. Do you have credit cards? You ever had a credit card that was maxed out? What do? You either get more credit or you have to pay it off, correct? Or you default and go bankrupt. That's where we're at right now as a nation, except we just keep adding more credit to it. Now, there comes a time when the credit doesn't expand anymore, and then it'll be so high we can't pay it off. That's exactly where we're at. Problem is, it's because the Federal Reserve note has created this euphoric money printing, which is going to cause tremendous inflation, which is buying power on we the people. Now think about it. What is this buying you? Our salaries are not keeping up. How much of this and how far does it go? What does it buy you? How far does it go? And this is the important part, because we know, all of us, without having to be told of a statistic, that this actually doesn't buy us nearly what it used to. And it's sad. I shouldn't even be laughing. It's tragic. It actually harms the middle to lower class and the poor the most. They don't care. We're stuck. We're in this cycle. We have no choice. We've been printing money. We've been taking the global power shift away. And in comes China. And it's been the Federal Reserve issue all along. But in the meantime, we've created so much debt and credit that time is getting close. And I don't believe it even comes from America, to be honest. I think this next big cycle down is coming from other sources, probably Europe, especially that Deutsche Bank Italian angle. So, get off on the dollar reserve note. Just understand that it's that money printing that has created this cycle. For instance, look at this. So we talk about this a lot. It's stock market margin debt. Now, this is in the billions, mind you. And if we just go back in the middle there where the financial crisis hit, we really had a debt level of about $200 billion at the time in the stock market. We have now successfully increased that to well over $600 billion. Now, that is margin debt, meaning borrowed money. People have borrowed money because of low interest rates, use the borrowed money to go into the stock market at a tune of $400 billion plus. Now, I bring that up again because think about 10,000 cattle that have to get through a single gate if a stampede hit. That's what's going to happen when this market starts to sell off. So it's very dangerous, because if you're all in the stock market, before you can get out, you'll lose 25, 30%. And if you're not properly diversified, you'll have no way to get back into this. It's going to cost you a lot. Because think about this equation. What's the object of being in the stock market or for your retirement portfolio? Is it to double your money? Most are going to say yes. Now, for those of you that just said, no, I really don't want to, I'm not looking to make money, I just don't want to lose money, I just want to be flat. Well, keep in mind biblically, parable of the talents, and keep in mind biblically that we are to be good stewards of what God has given us. Good stewards, mind you. Good managers. Be in a place where we can actually grow our wealth. If it's not for you, think about it for the kingdom, the church, and the ministries, or those around you that need help. So understand that if your objective in your portfolio is to make money, would it be fair to say, would you like to double your money in your portfolio? Answer is yes, right? In order to double your money in the stock market, it's going to take 50,000 on the Dow. Do you think that's going to happen anytime soon? Think about that. We're at 25 now. Gold has to go to 2,600. Now, it could, but gold has never been at 2,600. Yet silver just has to go to 32, and it's been there a dozen times in 10 years. So what's more likely? The stock market going to 50,000, gold to 2,600, or silver to 32? Think about that for a minute. Doubling of your portfolio. That's why it's so vital to take serious the concept of having physical silver in your retirement account, and how seamless and easy it is to roll over a portion of your IRA into that physical metal for peace of mind and sleep. And I'm just going to put it this way, and education is the best way to do it. Cornerstone is a great place to get educated and guided. They're all on fire Christians, and they're definitely looking to at least give you the proper information for you to make judgment. They have operators standing by, so give them a call, because buying power is essential to protect. If you understand the money printing we're engaged in, you'll see we're in this deflation, inflation mode. But when inflation hits and we have buying power depletion even more, you're going to wish you had silver. So let me take a quick break. We'll be right back.
Buying power. What does it mean to you and your family? Have you noticed the prices of everything we buy are rising? Goods and services are becoming more expensive, and the money you work so hard for buys less and less and less. If you saved $250,000 in cash in the 1960s, that cash today would be worth approximately the same, $250,000. Yet does it have the same buying power today? No, not even close. Now take that same $250,000 from the 60s saved in silver instead of cash. Today, it would be worth a staggering $4.25 million. Now that's buying power. Protect and preserve your buying power now by rolling over a portion of your IRA into a silver IRA. Use the power of constitutional money silver to protect your standard of living in retirement and maintain the quality of life you are hoping for. The paper dollar you are saving has tremendous challenges ahead, so don't delay. Call Cornerstone Asset Metals now at 888-747-3309. Don't give away your hard-earned savings any longer. Be diversified. Get protected today.
Welcome back. So the reason I'm passionate about being properly diversified is I remember 2007-8 very clearly, and how many people were not properly ready or prepared for the time, and they lost 40–50% in the market. It took them forever to get it back, but yet the buying power was so destroyed that many of you who think you're even in your account really are not, because inflation on the buying power of your dollar has been so extraordinary. The real numbers have been extraordinary. So consumer credit, this is margin debt, the printing of money is so important to understand, because this is what dictates what we're saving and its ability to buy us in the future. Because at the end of the day, what do you want to do? Hey, I made 20% in a stock or my investments this year. Is that important? Or is it what does this buy you in the end? I think that's really all that matters, right? So as you go into retirement, do you have the protection of inflation that allows you, instead of pay $10,000 for a new roof, it costs you $20,000, but you're prepared? That's important to understand. Because look at this. This is total consumer credit. Now, we the people stood ground for a little, but we went crazy too. And if you notice right from the big red arrow there on the left, where 2008 and the market collapsed, we were at about $2.6 trillion on consumer credit. And believe it or not, after that great recession, we've actually increased $1.2 trillion in credit. Consumers have gone drastically into debt. We're in more debt now than we were in 2008. Think about that. 2008, think what happened. Are you prepared? So when you look at consumer credit, we've expanded $1.2 trillion, just in the consumer side, mind you, not counting the federal deficit that under Obama, he was handed $9 trillion, now is $21 trillion and ticking higher fast. And when you put all this together with China, Russia, and the rest of the world, or a big chunk of it anyway, coming against the dollar, you see where our national security interest is. You see the threat to our buying power. So many of us have expanded. I understand low interest rates. I understand this was a good time to take that risk and to take out loans to expand business and opportunity. I get all that. I am positive that the policies being put in place, if we can continue this for a few years, will definitely sustain us through this global reset that seems to be coming, and will allow us to come out of it better than we are right now. Because the Chinese are not stopping. Matter of fact, they're challenging us right now as we stand. We think Japan, obviously one of our great allies, and we think Taiwan, that we have this interest in, actually an agreement that we would defend Taiwan. We think that we have a foothold in the South China region. Now, Technically, I would say yes. I think our military would probably say we can do it. But folks, this is China's backyard. They're not going to allow it. They have finally got an emperor. They have the financials in line. They have the trading designation in line. They have the currency up and running. They have the petro yuan, which is now an oil contract backed by gold, mind you. What they say is going to happen. They are not going to get pushed around. I think you're going to be surprised, because if they have an economic problem, they're just going to tell their people to suck it up because they're communists. They don't care. Look at their social credit system to just tell you. It is a horrible scenario. But here in the United States, as we're being divided politically and not paying attention to China's encroachment and a big chunk of the world's encroachment on de-dollarizing the finances, I always contend, the reason I keep bringing it up, once China says we depeg our currency from the dollar, we're done. That's my take. We have so many tens and tens of trillions of debt obligations going forward. It's unbelievable. Look at this student loan debt. We have gone from 2008, where the big market collapse took place. We have expanded student loans, not seasonably adjusted, mind you, 146%. We are well over 1.5 trillion in debt to student loans. And the real sad thing is, most of these students aren't very educated because they're getting this social justice stuff jammed on them and socialism jammed on them in college, and they're not being productive. So they're not going to do well. Millennials will do justice to start saving the hard, tangible asset for what's coming, because this you can hold on to, and in the market system that is going to be severely challenged will be difficult to get through to. So keep in mind as we move into the summertime, it looks good. I'm excited, and it's so thankful for all of us that we have a break. Problem is, we've expanded at 150 trillion in debt since 2008 globally. We've printed over 15 trillion new currencies. With these interest rates rising, which is really being done just so they can lower them when the collapse happens, it's putting tremendous pressure on the emerging markets. The market is done going up, folks. It'll go up a little bit, but I'm just contending it's not going up much. So again, doubling your money, what's important? So until next week, stay focused on being diversified and stay focused on being properly put in tangible assets. We'll catch you. God bless you.